Welcome to today's episode of ETF Central. My name is Bilal Little. I'm your host. Really excited about my next guest. This is my business partner. Her name is Maital Legum. She's head of operations for all ETFs here at the New York Stock Exchange. She's listed more ETFs than anybody in the industry. What's most important about this particular guest is we get to unpack a really unique conversation to give you a glimpse and insight into all things that operationally go into listing and launching an ETF. So really excited about this. Maital, welcome to the show.
Good to be back with you. First time hosting a podcast where I'm the guest with you. So we've been working together for like a year. So I think it's about time.
No, it's a good time. I'm excited to have you. This is going to be a good conversation. So Maital, for the guests who don't know you, or for the listeners who don't know you, tell us a little bit about your background and how long you've been here.
All right. So I know it's going to come as a shock for those who are seeing this and can't believe it, but I've been here for just a short 14 years. Hard to believe. It's felt like a lifetime. The industry, we'll talk about this, but right, the industry, the process, everything has changed and continues to change, right? So it's been a really dynamic place to be for the last 14 years. Not even just from an NYSE and an ICE perspective, quite frankly, but also just from an ETF industry, product development, adoption, just every shape, every way you can look at it. It's just been extremely transformative and it's kept it really interesting. So here I am 14 years later, and it's hard to believe because, I'm not, you can't believe I'm that old that I've been here for 14 years, but here I am.
No, it's like the industry is all converging, right? So it's an amazing opportunity across the ETF spectrum, which is nice. So for people who don't know, tell viewers a little bit about your background specifically on listing and launching ETFs.
Sure. So, as I said, I've been here for quite some time, and I started in the ETF teams 14 years ago, which I came on board and my whole job was just helping issuers list products, which is still what I do today in a very different capacity, obviously, but worked with one of our colleagues, Tom Champion, who is still here. I think I gave him a shout out on another podcast that I did because he, whether he liked it or not, he hired me and here I am still working with him. So we would focus on half the issuers and we would go through the whole process. And back then you could imagine that, we were probably listing a quarter of what we list today, but every listing was actually more challenging than it is today from an exchange perspective. And we'll talk a little bit about that, why that is. But and then today I really manage the whole process. So when an issuer decides, hey, I want to list on the New York Stock Exchange, then they come to myself and my team and we talk about, okay, well, what does that actually mean and what does that entail? And once you're listed, what are the things that you need to think about? And now that you're an NYSE listed fund versus before where you weren't listed. So.
Yeah, no. So it's funny, right? Because when I transitioned to join the team, I come from the side of the business where we call everyone asset managers. When I got here, you guys call everyone issuers. So obviously the terms are synonymous, right? They effectively mean the same thing. So let's just talk about for an issuer listing for the first time, like what's that process and how do they engage with you and your team?
So, the exchange is something that they think about in so many different parts of the listing process. So I think it really depends on the type of issuer it is, issuer that it is. So what we're seeing a lot of today is the traditional asset managers who are like, finally, okay, it's time to list ETFs. So they have no choice. I mean, it's kind of as they don't really have a choice anymore. And so they know how to run money.
Yeah.
They know how to run portfolios. A lot of them know how to sell. A lot of them know how to talk to clients. But what they don't know is what it actually means to be in an ETF wrapper.
Yeah.
It's like, it sounds great because that's the buzzword around town. ETFs are tax efficient. They're lower cost. It's easy to buy and sell. It's easy for retail to access, but they don't actually know what it means to be a listed fund, right? So now what happens is that they take everything that they've known. They know how to manage portfolios. They know where it fits in a client allocation. But they don't know what it means that now it's going to be accessible all day long, right? So they can't, and now they have another partner that's we're a self-regulatory organization, like what can and can we not do, and then we work with the folks upstairs to manage that process. But you can't just do anything you want because now you're listed, right? So if you want to make changes to the funds, if you it's another, instead of just notifying in filing like you would or in a press release, now the exchange is a part of that conversation, right? Because this is pricing and trading all day long. So are there things that you do to, that you're want to do today that or make changes to the fund that might impact investors? And what does that actually mean that now they can buy and sell it all day long? So,
Mm-hmm.
you know what I'm saying? Like that's something that's like unknown to them, right? And now they're also working with the exchange. They're working with market makers, or working with APs. They're working with they're always working with the
Mm-hmm.
custodian banks, but it's a lot faster pace, right? You got to think about so many more things than just managing their portfolio.
Yeah.
So I think that, and I know you gave me a list of questions, but I'm
No,
kind
it's
of
fine.
jumping the gun, right?
It's
So
fine.
that's some of the challenges that come with becoming an ETF issuer, especially for the traditional asset manager.
Mm-hmm.
And you come to the exchange, and some of them, have done a lot of due diligence, have done their homework, this industry is like very friendly. So everyone talks to each other and tells you like, this is what you need, or
Yeah.
a lot of the custodians know a lot of this, a lot of the attorneys know a lot of this, right? But it's like putting all the pieces together. It's like,
Yeah.
what does this secondary market piece actually mean?
Yeah.
So when they come to us, some of them know
Like
nothing.
what they need to do.
And some of them are like, okay, well, what does that mean? Like, so
Yeah.
people are gonna see my, it's gonna trade all day. Like, how's it gonna price? Or, hey, what do I have to think about when I want to make a change to my fund? Oh, well,
Mm-hmm.
you should probably let us know and let's talk about it, because you don't want to do something midday, or what is material, what is not material. Like these are
Mm-hmm.
things that like a traditional asset manager never has to think about.
Yeah, for
And all
sure.
of a sudden, this ETF wrapper makes you like talk to 5 other partners that you've never interacted with,
Yeah.
as well as, and whole compliance and regulatory element that people, it's really important,
Mm-hmm.
but it's something that you have to like build into your process. So we kind of
Yeah.
help issuers through that, build out in their rule books and their processes, so they kind of understand where we fit into their
Mm-hmm.
ecosystem. Because I think asset managers who go into ETFs world all of a sudden are like, why are there so many parties
Yeah.
involved?
Yeah.
Why do I need to talk to 10 more people every single day? It's both good and bad, but obviously it creates a lot of complexity that they are not used to.
Yeah. So I'm glad you kind of bring that up, because I think it's a great opportunity for you to actually like share like what role specifically does the New York Stock Exchange play, and your role to like help manage that relationship, right? Because there's so many different pieces of the puzzle, but it seems as though the core partner will be the exchange, and in this case, the New York Stock
Right.
Exchange.
So one of the great benefits of working here and having this seat is that we see so much, right?
Yeah.
So, we list hundreds of ETFs a year. So, I mean, my career here, that's thousands, right? So
Yeah.
we've really interacted with every piece of the puzzle, right? So we have this view that's super unique. So as a listing exchange, yes, we run great secondary markets. That's not what we're going to talk about in terms of market quality.
Mm-hmm.
Yes, we have a great internal support system. But one of the greatest assets for the for the New York Stock Exchange ETF team is the knowledge and the expertise. And what does that
Yeah.
mean? Is that we're a little bit like in-house consultants, right? So you can come with any question and just ask us.
Yeah.
Literally, like, I mean, you're part of this conversation too,
Yeah.
right? From a sales and distribution perspective. But like people are like, I'm getting like 5 different vendors telling me all these things. Like, what do I need to know? What do I need to focus on? And we're a little bit of a sounding board on that. And
Mm-hmm.
that's not, that could be in many, come in a lot of different flavors. So it could be from a sales perspective, it could be from a legal perspective, or it could be from a custodian. There's so many partners.
Mm-hmm.
And so we've really become this mini consult, free of charge. You're at your listing fee.
Yeah.
We're really partners. And so we spend a lot of our time just talking to issuers to help them grow their business, or even just get to the starting point of listing an ETF. And
Yeah.
we talk about this all the time. Like, well, why would you do that? Like, how do you make money?
Yeah.
So at the end of the day,
Still a business.
it's still a business. You're
Mhm.
right. So people are like, how do you spend all your time just like giving people free advice? Well, we're only successful to the extent that our clients are successful.
Yep.
So I think I always like to tell prospects or issuers, if your fund doesn't grow, doesn't trade,
Mhm.
we're not successful. We don't make it, that's,
Yeah.
we want to grow together. So a lot of what we do we kind of lay the seeds, and that maybe in 2, 3, 4, 5, 10 years from now,
Mm-hmm.
your fund is going to be large and it's going to be trading and it's going to have auction volume. And that's really when everything kicks in. But, it could take a couple years. And we spend a lot of that time helping you in that process and in that journey, because it is so different and unique from anything that you might have come from, most likely as a traditional asset manager, of course. So we work. I mean, I can't even tell. I wish I could. I'm trying to think of like the strangest questions I've ever gotten. That would have been a good
No, look,
prep, but
so look, this is a great point. So what are the misconceptions issuers actually have at the time of listing or launching?
yeah, I think if people get so like hung up on getting everything exactly perfect, but the beauty of ETFs is that you can grow your assets at all times.
Yeah.
So it's like, get this thing done, get it out the door, like work out the kinks, and then go sell it. So I think what happens, because most of us are always focused on like, okay, like this is the goal. We want to finish this project.
Mm-hmm.
But you're really starting your project when you list, right? So I
Mm-hmm.
think people get so fixated on all the tiny little details, even from like a PR and marketing and sales perspective.
Mm-hmm.
And they're like, they make these plans. And I'm like, you're a small team. Like maybe you should focus on like talking to market makers and getting
Yeah.
everything set for launch and making sure that you're going to be managing this fund from the day to day correctly,
Mm-hmm.
versus 20 steps ahead. Well, what's our marketing?
Yeah.
Sales should always be thought of before you even launch, but we'll get into that too. But point is that it's like, hey, this is open-ended funds, right?
Yeah.
So you can sell this at any time.
Yeah.
So it's like, you know what? List 5, see what's topical at that time,
Yeah.
see what solutions people are looking for, and go with that. But like, create that menu of options for
Mm-hmm.
yourself. And we're all excited. We all want to talk about bell ringings, and let's not talk about that. But we all want to talk about, or podcasts or
Yeah.
whatever that you want to do to talk about your product and to get the name out, right? And that's all very important. But when you focus on that,
Yeah.
without over any of the details,
Yeah.
it's kind of, to me, and I know some, you shouldn't list funds that aren't going to sell. I get that, right? But the order of operations of like, don't get fixated on that to delay your launch,
Yeah.
is where I'm like, this is where you should focus, and then kind of move on. I mean, it's all a big picture, right? You're not going to launch ETF so you don't think you're going to be able to sell. Well,
Mm-hmm.
we hope. We hope. Sometimes you don't know. Quite.
Yeah.
There is like 1 in 1,000 that happens, right?
Yeah.
But it's like, focus in due time. I think it's like, that's why I love ETFs. It's like, the
Yeah.
beauty is that it's open-ended. So you can always grow.
Yeah.
You can always pivot. Let's say like this strategy doesn't work. You want to adjust it a little bit. That's okay.
Yeah.
We kind of, it's very fluid.
So before we transition into like the post-launch part of the conversation, like let's just kind of simplify the entire step-by-step process. Maybe not do every single step, but like if you were to build a checklist of the 5 items that people should do at the very beginning of their launch, would it be, hey, let me make sure I got my lawyer correct. Let me make sure I have a good partner from a custodian perspective. Let me make sure I have good relationships with market makers. Like, what would be that sort of 5-step process, just off the top of your head, like you would check?
So first and foremost, it's choosing the right partners.
Okay.
So like there are and one of them being the New York Stock Exchange, obviously. But you have a lot of choice in ETFs, which I think is why it's very, when you're like, I want to launch ETF, it could be very confusing because there's so many different vendors. There's so many different partners that you're going to have to work with.
Mm-hmm.
Some of them will be your vendors. Some of them you'll sign a contract and you'll be paying them. And some of them are going to be partnerships with market makers and authorized participants and people that like are new to your, to you as an issuer, but very well known in our ecosystem.
Mm-hmm.
And so it's creating great relationships with your partners, because at the end of the day, that they're going to be so important to your success, because they're going to help you through that process, right? So this industry is very friendly. Yeah. So people are always trying to help each other. Mm-hmm. So if and then we all want you to grow, because just like I said, we only do well if you do well. Same with many of your other partners, except your lawyers. They're always going to charge you no matter what. But just having somebody you're really comfortable working with and someone who you can trust is really important. So that's like, I want to list an ETF. That's great. Now I got to get legal counsel. I got to talk to market makers. I got to talk to an exchange. I got to talk to a custodian. I got to have a distributor. All these parties have to come together and work together for that common goal. So if you have to spend a lot of time in talking to, like, who are you comfortable working with? Who do you think is going to help you grow? And you have to ask yourself those questions as you're going through that journey, because there's a lot of people who are going to be wanting your business. This is a growing industry. It's a hot industry. And so I think that's probably what takes issuers the longest, but it's probably the most important because once you have all of those things set, exactly, it's your foundation, and and it's not so easy to change these. It's not easy to change a custodian. It's not easy to change an exchange. I mean, you can, of course, like nobody is going to get you locked in, but how much easier is it if you're comfortable already, everything is going well, and that doesn't become a hurdle to your business, right? So you know, I kind of joke that people shouldn't be fixated on sales, but at the end of the day, like, you shouldn't be listing an ETF unless you know that there's a market for it and that you can distribute it and sell it, right? So that is an element of one of the 5 things is, okay, like, how am I going to distribute it? Is there a market for this? Like, is this something somebody out there needs in their portfolio? Is it something that a retail investor wants? That's a question you should be asking yourself before you list it, just because there's so many good ideas out there. I mean, there are, but like if they don't,
good ideas,
but like if they don't fit into a framework, like they're not going to do anything. And then at the end of the day, and I always tell people, you know, your market makers are really important, right? They're going to give you the support that you need. You're going to quote on screen. But, and this is a very unpopular opinion, if nobody knows about your ETF, nobody cares about your market quality.
Exactly.
So I hate to say it, but at the end of the day, trust me, if people know about your ETF and they're interested, market makers are also going to be interested. So, you know, you have to also develop a plan to show market participants that people are going to care about your ETF, that there's a reason that you're bringing this out. So it all kind of fits together, if you know what I'm saying. So good partnerships. Make sure that your case of why you're listing this is really solid, because your partners don't want to work with you if you're just they're not going to want to work with you if you're just like coming up with something that nobody wants except you because you think it's like, I don't know, but, you know, like, so you have to be able to scale this, and it's really important that you know your story. Why you're doing something before you have any of these, honestly, before you have any conversations, in my opinion, like as an asset manager, like obviously if you have a distribution network and you're already, you know, you want to have more in your toolkit as a large asset manager. We have many of those. I won't name any favorites. Then of course that makes sense. But especially kind of the smaller niche, you know, issuers who are using white label platforms or, you know, a lot of kind of these turnkey solutions, because you have a great idea, you have to work really hard to say, this is why I'm doing it. And you have to focus on that, or you're not going to garner the support from the ecosystem.
Yeah, no, look, I agree with you. I got to tell you, like when I first came over, you know, everything that you're saying makes so much sense, because look, operationally, to get things set up, you quickly realize who's either going to have success or who will not have success, right? Because they're going to be bogged down with questions that might not be applicable for the longevity and success of their business. But if they would have addressed these things up front, chances are they might not have had the issue. Now, let's kind of transition the conversation, because you kind of brought this up to, okay, you list, and now let's talk about success and market. So I just kind of want to share this because I think this is so important. When I came over, you and the rest of the team would spend a lot of time saying, like, their sales and distribution strategies need to be like ironed out at the time of ideation, to your point, right? Like, yes, you want to make sure the foundation is good, but now that you're in market, you said this just a minute ago, it's like, if no one knows you exist, like, how are you telling your story, and like, how do we build visibility? So what success measures have you seen people take and or have after they've listed and launched in the market? Like, what do you think there?
I've not seen many issuers succeed by coming up with how they're going to market and distribute after they list. I'll say that. I said 1 in 1,000, right? Like,
Yeah.
listen, there's going to be that crazy idea that like hit right in terms of like market timing, news cycle, and like it works.
Yeah.
But that's not, it's not like you build it, it will come. Like that's not how it works. Like we are not in the year 2000 or whatever. Then some of the original ETFs, the first couple, first 100 ETFs listed. So the measure of success is like, I think like slow and steady wins the
Yeah.
race. I mean, there are, and I put that with a caveat, there are other opportunities. Don't get me wrong at all, but this industry has so much noise, right? We're going to list 1,000 ETFs this year, 1,000. Like I used to know every single symbol and like every launch, and now like I can't. There's
Just put that in perspective. We'll launch 1,000 this year. What did we do last year?
half of that.
Wow.
So, and then the year before, like if I look at, the last 14 years, I'm like, I thought like we had years of like 230 and I'm like, oh my God, that was a record breaking year. Right. So all of a sudden it's like, we're 4 times that.
Yeah.
And so, as I said, there's a lot of noise. There really is. And so, but a lot of these traditional asset managers are coming into play, and they already have, reputation. They have a client base. They have a sales force. So that's great, right? I haven't seen, but to think that you're just going to list an ETF and then you're going to come up with like how you're going to sell it later on, it's probably, I wouldn't advise. How about that? I wouldn't be advising that. So at the end of the day, the most successful firms are the ones that are very realistic in terms of their expectations, and to understand that this is something that's going to take a while. I mean, again, you have gatekeepers, you have platforms, you have track record challenges, and that's 99% of the products that are coming out. So don't count on being the 1 in a million that's going to hit it because somebody, leaked a story that was exactly what your ETF is about, right?
Yeah.
That's like, you can't count on that, right?
Yeah,
So don't just list without reason, because there might be something that somebody wants. So success is really understanding how, what's your 5-year plan. And 5 years is probably realistic. You need to be able to sit on this stuff for 5 years. Otherwise, I mean, we see a lot of this. We see a lot of closures. People don't raise enough capital to put these ETFs out for long enough. And it's kind of a shame, but like, that's, I guess that's, I just know, not surprising, right?
Yeah.
But I do think you need like 3 to 5 years to even like scratch the surface on some of this stuff. And I mean, you've seen, and again, I don't want to name specifics, but you've seen this in play. Like we were just together in in T. Rowe Price, right? I have to, and I was there 2 years ago, and they were like, we're at $1 billion, and we're like, oh, T. Rowe, like you're massive. And then all of a sudden, like now it's like it took 2 years and it's just skyrocketed again.
Billion. Yeah.
And if you talk to them, they were like, we manage expectations on this, right? So
when you say that, you mean internally to their senior,
internally as well as to them, to say
themselves,
and like learn how to learn what it means to be an ETF issuer.
Yeah.
It takes time, plus time in market, plus people being comfortable with your product, and go from there.
Yeah.
So, success is really patience, which is really hard for people.
Yeah.
I mean, I'm not an entrepreneurs. I get it, but like everybody's like, is trying to figure out how you're gonna grow as fast as possible. But this industry it's hard to do that in this world and in this competitive market where assets are sticky. So, and we're gonna get into this, but like that's why we've also seen nobody's launching another like S&P 500 ETF, right?
Yeah.
Because that's not what the opportunity is, right? The opportunity is in the active space. So that's where product development is. That is where people have some allocations that they can play around with. Like no one is selling their, super cheap plain vanilla index for your no name ETF, right?
Yeah.
So, and I think people have gotten that, right?
Yeah.
So we've seen that, but that sliver of active opportunity is small but massive, right? So we're hardly seeing, passive funds launch today.
Yeah.
But if you look at the assets, more assets are still flowing into passive ETFs. I mean, we talk about like active is growing tremendously. However, there's still more assets going into passive. That's just how it is,
Yeah.
right? But that piece of the pie is getting larger and is where a lot of people can make big moves.
So it's so funny because you touched on a lot. So there's two things that I want to hit on really quickly because we joke about this as a team. When ETF issuers list, I have to say this directly to the camera. This is so true. They think they're listing an IPO, right? And you talk about success and longevity, meaning like planning to tell your story multiple times over and over the news cycle to grow your assets steadily. However, they think it's this sort of IPO launch and list and like bang, all the assets are going to come in. I'm in market. No one knows you exist to the point that you said. So now we transition into this conversation because I think this is important. You're talking about longevity and you're talking about where the assets are going now. Like, speak a little bit about the innovation that you're seeing with the active space and like why you think that is still the area for growth for the ETF wrapper.
Of course. So, you know, I'll separate it into two buckets, really, or really it's three buckets in the ETF space. But I love how people talk about active is overcome, you know, in terms of the number of funds that out there are active more than passive, right? So we have about half the funds in the US are technically active, right? But
Yep.
we separate that into several categories. So one opportunity, and I keep talking about it because I think it's actually I'm a very conservative type of person, so I like this like slow and steady.
Yeah.
You have a distribution. So what we're seeing is these traditional asset managers now just offering their solutions and their, you know, well established
Brands,
PMs
yeah. Hmm.
list, you know, just put their ETF in, their fund in an ETF wrapper. We'll talk about the, you know, multi-share class obviously is coming and that makes it easier, but let's just pretend that's not there yet.
Yeah.
Right. So we see that's an opportunity to take your current client base I mean, you can expand it even more, but to take your current PMs and that team that has done so well over the last 10, 15, 20 years, and now you're going to offer something in an ETF wrapper. So now not only do your current clients want an ETF, right, because
Mhm.
of tax efficiencies and lower costs and ease of coming in and out,
Mhm.
right? You now can expand that even more. So it's not just your, you know, you do have some opportunities there, but I do think that there's still the majority of their sales probably come, I mean, I don't know,
Yeah, for
come
sure.
from your, you know, your traditional clients. So it's just being able to take something that's worked
Mhm.
just from a portfolio management perspective and putting it in an ETF wrapper. That's one of the, I don't say easiest, but that's what we've seen a lot and kind of I call it the last slew of traditional asset managers are coming into
Mhm.
ETFs right now. There's still some that are not there yet. It took a
Yeah.
while.
Yeah, yeah.
So we're seeing a lot of that. They were seeing a lot of success, right? Because they know what they're doing. They have their research. They have their PMs. They have their track record.
Mhm.
But one of the most exciting area of development that we are seeing in the ETF space is this like income producing structured product like
Yeah.
products that are now becoming available to the mass market. So the end of 2019 we had this ETF rule come to be. So as I was saying, it used to be much harder to list ETFs from our perspective, right? So
Yeah.
it was an opportunity for the SEC to create what we call the ETF rule. And what it did is that it basically opened the doors to anything you could do in like a mutual fund wrapper, you can pretty much do in an ETF today,
Mm.
right? So like if you look at from 2019 till today, like that really opened the floodgates.
Yeah.
And that opened the floodgates to being able to do strategies that are very similar to structured products, things that like you and I never had access to, right? As individual investors, as retail investors, you had to be, you know, have access to a certain amount of, you know, funds to be able to be with this hedge fund or to talk, or buy structured notes,
Mhm.
right? So what is happening is that is now being wrapped in an ETF for
Mhm.
anybody to be able to just buy. Now, is that safe? It complicates things because these
Yeah.
products are not that easy, not always super easy to understand.
Yeah, yeah, yeah.
So from that perspective, I think there are challenges to these. They're great tools
You mean to educate
to
the investor?
educate,
Okay.
right? So
Yeah.
they're great tools for us to be able to utilize in our portfolios,
Yep.
but they're also much harder. And that there's a reason that they weren't just available to any retail investor until now. But you know what? You know, I think it's, you know, the world has come to, hey, these are your options. You decide whether you should buy it
Yeah.
or not, right? And that same goes with the crypto
Yeah.
stuff. There's a lot of hesitation to allow these, my grandmother to go into her account and
Yeah.
buy this ETF that she does not understand.
Yep.
And there's still a lot of that, but I think we've come to a point where like maybe regular, where maybe we're okay with that,
Yeah.
right? So the disclosures are there, and it's up to you as an individual investor to go and read that and figure out if this is a good fit for you and can you take on the risks, yes or no?
Yep.
What
So you touched on this. Well, I got to bring it up. You brought this up. I didn't bring this up. You brought this up, just so we agree. You agree?
all right.
All right. Crypto. So generic listing
Oh, so
standards
this is
just
all a
went
part
live.
of
Yeah,
the
it's part of it.
it's part of the development.
But
Yeah.
because look, you head of operations here. Obviously, this is kind of coming down your alley. Like, what's going on? What are your thoughts, and what do you see?
All right. So for those who haven't been keeping up, and I'm sure most people listening probably do realize this, but the end of September, can I say the date that we're filming this? There was what we call a generic listing standard. So previously, anytime we had to list a crypto ETF, it was a pretty long regulatory process that you had to ask the commission to review your specific ETF, go through this whole process up to like 240 days, and then they approved or disapproved. And it's boring stuff, but like I live and breathe this. So if you have any questions, you let me know. Not, people listening, email me, I'll explain. But they gave us a rule set
Yeah.
where we actually don't have to go through that process. So we call a generic listing standard.
Okay.
So what that means is that anybody that wants to list an ETF that meets these generic listing standards are going to be able to do so from an exchange perspective, because there's other regulatory bodies down in DC that also have to review your application. So it's not just us,
Mm-hmm.
but the path to listing is now much shorter
Okay.
than it was before. So before I said up to 240 days and maybe approval, disapproval, but they gave us measures of, we've done so, like this is what the SEC does in general, and we've done this through the entire 30 plus years of ETFs. Like you ask for product relief one by one by one by one. Once you do enough of them, there's kind of like a path to approval.
Yep.
And they're like, okay, here's what you have to meet in order to list.
Okay.
So I mean, I think we kind of got there. We got Bitcoin, we got Ethereum, right?
Mhm.
Those, and there's no shortage of those type of products and applications. So they kind of seen enough to feel comfortable to say, if you meet all
Certain
these
standards,
measures,
yep.
futures, certain amount of time, then you can list, because we feel comfortable. Because why do we need to do like one by one by one? It's not
Yeah.
really the best use of their time, and
Yeah.
there's a lot of things on their docket. So that is going to open up the floodgates even more, in case there weren't enough. There's a lot of coins out there. I'm not,
Yeah. There's a lot.
there's a lot going on
Yeah.
there. And, it's also, that's a whole other ball game, because it's not even just you're not talking about your traditional asset managers, which is what I keep talking about.
Yeah.
But now you're talking about this whole other type of, issuers
Word, yeah.
who can now issue products,
Yep.
because they don't have to be like a traditional asset manager to run a crypto ETF. I mean, they
Yeah.
have to set up the framework, and of course they have
Yeah.
to do that, but like,
Now,
and a lot of this
historically, they might
stuff,
have never run capital
a
before.
lot of them probably,
No established
yes.
track record. Yeah. So yeah, you're
And,
right.
These things this is what people want.
Yeah.
So there's a lot of opportunity, and
Yeah.
when there's a lot of opportunity, then people are, going to fight, and it's, who's going to be first to market, and how
Yeah.
can we get, and there's a lot of retail, and I think eventually it will probably just become part of like our ecosystem, and we won't even remember that like crypto was like
A
brand
thing,
new.
yeah.
But right now, that's like the
Yeah.
shiny object that everybody's chasing. So you can only imagine that we're having a lot of those conversations and how to list.
Yeah.
And there's new listing standards. So my team, you talked about it, like what's that we're responsible for. Now we have these rules. Now we have to work with all the issuers to tell them how they list under these rules, and kind of, under the hood, how it's going to work, and what you must have set up, and what you must represent in order to comply, in order for you to list, what, under our expectations, which the SEC kind of, gave us our rule set that
Our marching orders.
Exactly. They gave us our marching orders. And so now it's my job, with a lot of people in this building, not just me, right?
Yeah.
To work with these issuers and to guide them through that. And as you said, like a lot of these issuers no, even less because they're not even asset managers.
Exactly.
So
Exactly.
I think there's a lot of competition.
Okay.
There's a lot of noise, but there's also a lot of opportunity,
Yeah,
right? So that's great for us. I mean,
for
we
sure.
can't breathe. We're super busy, and I think we listed like 30 funds last week and 30 this week, and it's nonstop. But the industry has about maturing to do. I mean, I think we'll get to a point where maybe it will slow down, and in a couple years. There's a lot of spaces. There's still a lot of space to go up.
So,
Um,
I'm glad you brought this up because this is the perfect transition. So we've launched 4,600 products. It's over $20 billion in revenue, $12.7 trillion in total assets. The industry seems to be very healthy and vibrant. Over the next 12 to 24 months, give me one or two big predictions. I'm not going to hold you to it,
gosh.
but we're going to just throw you on the hot seat.
See, I'm gonna push it out even more. This is my
Okay.
own. Okay, so I think 12, 24 months, we're still going to be on this basically non-stop upward in terms of number of listings and in
Yeah.
terms of assets.
Okay.
Okay, I think that there's still a lot of new opportunities and
Mm-hmm.
people are still kind of chasing that. So, and then now multi-share class. So I think we're going to see still a velocity like we're seeing today in
Yeah.
terms of new product listings.
Yeah.
And with that, also assets.
Okay.
Now, I take that out. Okay, that's 12, 24 months, maybe 36 months. I think we come to a point where it's like, how many ETFs can there be out there, and how many people are going to know about them and
Yeah.
buy them? So there might be an opportunity for some consolidation for as the industry will mature. I think that number will become a little bit more stable,
Yeah.
right? Like, how many ETFs can this market handle? I mean,
Mhm.
more than we have today because we've seen it with the mutual funds, right?
sure.
But I don't know what that number is.
Okay.
So don't hold me to it. But I do think that we see a place 5, 10 years from now where the number of listings do slow down,
Okay.
but the assets will continue to grow. That's healthy. And then you're going to see delistings and liquidations of things that didn't work.
Yeah.
Okay, like you don't want to leave duds out there, right?
Yeah.
It's not good for you or for the ecosystem, quite
For sure.
frankly. And then also some consolidations, like how many Bitcoin ETFs do we need? 20?
Yeah.
Maybe. I don't know. I mean, I could be wrong, right? There could be enough, but I do think that we're going to see some consolidation, a slowdown in listings, but we're probably like 5 years out from that.
Okay.
So just brace yourself for the next couple years that like it's not going to slow down because it's not. I mean, maybe I don't know if you agree or
No, look,
we're talking to people every day, so
Every
we
day.
know that like there's nobody's slowing down.
Yeah.
They're not thinking, but I mean that depends on the market too. Right now, everyone's happy. We'll see what happens.
Well, so,
but
yeah, some more volatility, right? But to your point, like there's a lot of different optionality there.
yeah.
So
And even with volatility, if markets are down, like there's an ETF
That's
for
what I'm-
everything, right?
there's an ETF for that.
There's literally an ETF for that. I don't know who somebody used to want to do some show called "There's an ETF for that." I don't remember who it was.
Maital, I want to say thank you so much for joining ETF Central. It's been great.
It's always good to be here and being on the pod with you.